Now, what we've had in euro, I'll be watching this going into tomorrow, potentially again, like the bund, this could be a late in the day move. Now, what we got yesterday is this huge drop in delta. That's a much more significant drop in delta than you would ordinarily expect. A lot of selling in this market. And this all came after the bid up and happened right in this area here. That was where all the selling was, and the market stayed strong. A lot of passive buying in this market, a lot of large orders that got hit, and did not drop. We've then since today we got a little move up last night, double topped effectively, dropped back down. What we're not seeing is this delta actually getting the move going to the downside. All we've done is dipped off a little bit and then rallied back up. So not seeing a great deal there either. The dip has also taken us into single prints, back down onto the top of previous ones as well. So effectively down right towards the tops of these levels down here. And the market doesn't want to go lower. All day long we've seen this consistent bid, large size sitting on the bid in this market, and I'll go and show you it. Great example of it came in as we moved back up above there we go. As we move back up above 1762. Now, the reason I'm pointing this out is not to do with is there a trade in it. The obvious trade here is to buy ahead of it and then try and scalp a little winner. You have 500 lot, very big order in the euro. But this is something that's been happening a lot, not necessarily 500, but an accumulation of passive orders that are getting filled. And that's why you're getting these sudden big dips in delta as these orders get filled, yet it does not create a move lower. What then happens is as the delta gets the dip, because you get selling into it, you then, as the market starts to build back up, get this turnaround and a quick bid up as that delta then unwinds. So here you go, there's the first opportunity into it. You can then scalp a little winner out of it. But this then gets filled, market drops down, we only really get as low as 60, and then we start bidding back up. So you end up with a situation that as long as you watch the dip down here, you realise that this market doesn't really have the legs to keep on selling. So you can stay in the trade, and then you are waiting for this then bid up. As it breaks out of that little range, you then get the quick flick up. Now, if you don't stay in as it comes off, that's fine. But the fact you've now built this range, you've had a couple of shots down in delta that don't continue the move. Now you've got a lot of short positioning that could well get unwound. And the breakout of the range is exactly where that happens. So it's more a case of the price action giving us a clue as to what could be coming in future, not necessarily direct trade on it. So it gets filled there. But we're seeing this all day long. You get more size comes back on the bid. All day long this was getting filled in the euro. Particularly yesterday where we got that massive negative delta and it's not managed to fall. So the fact that it's not managed to fall after this is giving you a little bit of clue that if we move to the upside, yes, we've already seen it on a 1 minute chart, the very quick reversal of delta here. There's a much greater amount of negative delta in this market that could come out of it as we go higher. So think about that from a bigger scale point of view as well. There's likely to be a bit more than just a quick whip up of 7-8 ticks if we do get that larger delta turnaround in the euro. So keep that in mind. But what the point is here is to be thinking about how passive orders that are sitting in the market are telling you quite a bit about what this market's really trying to do, and creating positioning whereby you're getting selling that doesn't actually then get a move going on. And so that selling then at some point is likely to reverse, particularly as you start getting higher and higher up.